All right, what's up, you guys? Welcome back to the Capitalized Podcast, where we help investors build wealth in real estate. I'm your host, Grant Smith. As always, this podcast is sponsored by our private lending company, Sharper Capital Partners. If you want to learn how to use private capital to scale your real estate investment business, you can learn more about what we do at sharpercapital.com. All right, so today I'm super excited to be welcoming Josh Montgomery to the show. Josh is the owner of Storage HQ, and Storage HQ owns and operates self-storage facilities utilizing portable units. I've been following Josh on Twitter for a long time, been looking forward to this conversation for a really long time. And he has a unique background and a unique twist on what he does to really operate his facilities at a high level and mitigate a lot of the capital expenditures that go along with running these very capital intensive businesses. So Josh, thanks for being on the show.
Yeah, thanks, Grant, and appreciate the kind words. I also follow everything you're doing on Twitter. Very interested in the hard money lending space as well. So I think there's some good synergy here. Thanks.
Yes. So why don't you go ahead and give us a quick background, starting, where you first got the inkling to get started into the real estate space, self-storage in particular, and then, kind of just what the overall, trajectory was to get into this industry.
Yeah, for sure. So when I was about 8 years old, my dad built us a home and I kind of fell in love with construction. I thought it was really cool watching him throughout that process, and it really inspired me just to be interested in construction and homes. And so out of high school, I became a carpenter. I worked for a developer and we did everything. So he would come in, buy a piece of raw land, parcel it up, and I would end up sort of in between all the different trades. I would end up just working with them for a day or two. So we did slab prep. He had equipment, so we did the dig. I worked with electricians, did a bunch of siding. And so it was really great for me to kind of reverse engineer everything. And I knew at that point, I thought I wanted to own apartment buildings. So my goal at that point was to buy and own a bunch of apartment buildings. And I'm on the West Coast, I'm in Canada. So very liberal, very sort of blue laws. And so I started as a carpenter, started saving some money, did some creative financing, and we built our first home, and then started buying a portfolio of residential real estate. Well, quickly, I kind of became demonized as the landlord. So it's not real popular to be a landlord. There's people not paying their rent, and there wasn't much I could do about it. And so that was really frustrating for me. So I started looking at other asset classes, and we kind of stumbled upon. I was interested in industrial, didn't really understand it. Triple net lease was pretty foreign. Had a few friends whose parents or family members owned self storage, and it seemed really interesting. And so we kind of dove into that head first, but with a twist. And so we used portables because it seemed like a lower risk way. I had no idea if it was going to work. I didn't know if people cared, but we leased a piece of land and we leased the portables. So it was very minimal capital expenditure to get into the thing, and it was super successful. So that was our first facility.
That is super interesting. And when you talk about getting into that first self-storage facility, was it totally vacant land and you added portables, or was it there was an existing facility and you decided to supplement it with portables? What did that look like?
It was totally vacant. So originally, we actually tried to do a ground up Class A development. So I bit off probably more than I could chew at that point, but I partnered with a developer who owned the land currently. I went down to Vegas to the ISS show, learned everything I could about storage, thought I was an expert, learned about all the new Class A stuff. That would have been about 2017. So learned about all the new tech. And I proposed to him that we should JV, both put up 50-50 and build a Class A development. We paid for a feasibility study. The market looked great. And we had some issues down the road, right around permit approval, about hold term. So he owned the land. He was going to get paid to build it, and he wouldn't guarantee any length of hold term. So essentially, I could have just been funding the development of his raw land. I wasn't comfortable with that. But I had all this information. I had all this experience and learnings from all this tech. I had a feasibility study saying the market was great. So I just started driving around that market looking for flat graveled lots. And I found one with a sign on a telephone pole saying truck parking available. So I phoned the owner, phoned the number, and I said, would you be willing to lease me the entire lot? And at that point, I think it was an acre and a half. So it was pretty small. It wasn't a lot. I think it was like $3,000 a month. And he said, yeah, and we'll put a fence up for you. So he put the fence up, graded it. I paid for the gate, put in, I think, 24 containers to start, and we did the rest boat and RV. So it was totally vacant, flat land. We leased up in less than 6 months, both all the RV and the portables. So it was pretty great.
Oh my gosh. Well, that's incredible. In terms of getting that facility leased up so quickly, what did the marketing look like to kind of, obviously you had the feasibility study, so you knew the economics of the area were ripe for it.
Yeah.
But in terms of marketing to fill up that quickly, what did you do?
Not a lot. So I use Storable as for both our website and our facility management software, and they convinced me that they had the SEO taken care of and that we are going to rank on Google. Well, half the time I couldn't find my facility on Google. It was super frustrating. But there was such a supply demand spread in that market that just driving by, people were finding me. But I tried everything. I was listening to Gary Vee at the time. COVID had just hit. I was making TikTok videos. We were on Instagram. We were in the Facebook groups. We were doing mailers to realtors and mortgage brokers and trying to do a lot of like local referrals. I really didn't know anything about marketing. So we just tried everything. And I don't know what worked because we weren't tracking any of it. Our systems have matured a lot since then, but we learned a lot. I didn't even have a personal Instagram when we started that. So it was a steep learning curve from the marketing sense, but the operations went really smoothly and we leased up anyways. And, there's probably a lot of luck involved, to be honest.
Oh my gosh. No, there are so many questions to dive into this first deal because it seems like a huge risk. I mean, it's less risk than probably going in, developing a facility and having to pull out, a bank line, a construction line to get that done. I
Yeah.
mean, obviously, breaking soil is a big deal. But I'm thinking from your perspective too, it's still a huge risk to go out there and sign a lease. I mean, I don't know what the deal was, like how long you decided you were going to lease this thing for.
Yeah. So we signed a 5-year lease and then I did a 5-year equipment lease on the containers, 100%. So I had no capital into it except for the gate, the cameras, and some operating costs to carry it until it was cash flowing. So I had we'd sold a few properties, and so I had a significant nest egg set aside. And this seemed like the lowest risk, most flexible way of testing all this out. We also offered delivery. So I bought a remote control forklift, and we used a third party contractor to come with a truck and trailer, and we could load the containers on them. So I just wanted as much optionality as possible, and then I was going to narrow my focus as we got more information. So, sort of, yeah, one step at a time. It was kind of fun. We tested a whole bunch of stuff. That forklift was also capable of moving sheds, so we were doing shed moving for a while to just see if that made sense, and it was there was a lot of experimenting.
So just to make sure I have the right understanding here, you have these portable containers and are you basically dropping them off to people's places and they fill them up and you bring them back? And
Yeah.
that's, oh, wow.
I mean,
Wow.
we would do anything. In the beginning, it was like, if you want to keep it to your place, I'll bring it to you and you can keep it there. Because then I have another spot I can rent out to an RV or boat at our lot. Sometimes we do same day moves. We drop it off, they load it up, we take it to their new house, and then we bring it back empty to our yard. We were doing everything. We don't do most of that stuff now because we figured out really quickly that the more moving parts there was, just the less profit we had and way more headache. And so self storage is really the simplest path for sure.
Got you. So the ultimate conclusion you arrived at, it was great for perhaps like leasing up pretty quickly, but
Yep.
now that you have, adequate, supply or adequate occupancy at your facilities, maybe just leaving the units where they lay. And then as new people come in, they can lease up the space and operate it there.
Absolutely. But the other piece is that we just had a big Class A facility. I mean, it took them probably 3 years to build the thing. It was just, there was a lot of red tape. It was a bit of a nightmare. Come online. And it did affect our occupancy. So we found, and I mean, everyone's occupancy dipped a little bit as well. We found we dropped about 10% just through net move ins once they opened up. So, should we ever be in a position where our occupancy is hurting or the market becomes oversupplied or saturated, then we can start offering mobile again. So that's what I like about the portables is there's just a lot of flexibility. So we could also sell them. I can sell off these units. I could sell half my units and reduce the size of our facility by half and do boat and RV or truck parking or build a shop in there. There's just a lot of options. And so I feel really secure in the investment because there's so much flexibility in the future.
No, absolutely. And being able to be dynamic as the market continues to shift. Like I'll speak to my facilities that I have in Dayton, Ohio. There was, not there's already like some of the big players in the space, like the public storages of the world are just down the road from me.
Yeah.
And my
Yeah.
facility competes pretty well with those just because we don't have as much overhead. But another player just moved in literally right next door and built all indoor storage and basically competing at outdoor storage prices because they were just trying to lease up the facility as quickly as possible. So
Yeah.
we obviously saw, like you said, we didn't have issues with people moving out. We just saw less people moving in. And so that natural attrition definitely lowered our occupancy a little bit. But to your point, like, I have a fixed place facility. It's not like I can just say, hey, this location it's becoming hyper competitive in this area. I want to just completely change my business plan. That doesn't work. That's not an option for me.
Yeah, and I own some drive up storage. We own some buildings, but there's no way to repurpose them. You can't convert them to offices or apartments or anything. Like drive up self storage is only good as drive up self storage. And the problem with self storage is you can't create demand. There's only so much demand in a market. And the biggest sort of risk or enemy of self storage is just oversupply, self storage itself.
Yeah.
There's always going to be demand, but it's that supply metric. And so that's why moving forward, I don't see us building any new ground up storage. It's if we can get the permitting, it will be portables because there's just so much flexibility.
Yeah. I totally agree with that. In terms of how did you learn about the portable space? I mean,
Mhm.
I've been doing self storage for a while, and I've seen some of the local competition use portables, but not really in aggregate. I feel like it's definitely not really understood in terms of the benefits and flexibility that it offers. So I'm curious from your perspective, how did you learn about it? And then what do the economics look like and how did that interest you?
Yeah, so there was a local company here who scaled fairly largely using just ISO shipping containers, so standard shipping containers, and they had 6 or 8 facilities. So I mean, I have to give them some credit because I looked at what they're doing. I'm like, man, that seems really simple. I mean, these are basically Amazon wrappers that are getting dumped here because we got nothing to ship back to China. Why not repurpose them? And they're doing very, very well. And so I saw what they were doing. We did use some standard shipping containers initially, and we tested them out. And some of the problems we were having is that the demographic for self storage in our market was middle aged women, and they were having a really hard time opening those doors, the standard doors. And you can get easy use doors on shipping containers, but they're expensive. And so our feedback was people would show up and they'd have issue with the container itself, and we were losing some customers. So we started looking at other options. We went back down to Vegas to the trade show, and every vendor of portable storage products is at those trade shows, and so we tested a whole bunch of them, and we ended up buying from a few different suppliers and testing them out, and then ultimately became a vendor for most of them. So now we sell 3 different products to help other landowners or self-storage operators to expand their facilities.
Got you. So the unique twist really with the type of supply that you're providing the market is something that's really engineered for this specific use case where it is self-storage, but it's
Yeah,
meant to be permanently fixed, can be moved if needed. And you're able to open the doors much easier than perhaps using a container door. And it's more affordable than trying to repurpose a container that has one of these
absolutely.
doors.
It's purpose built for that use. And as far as the customer is concerned, when you design them nicely, you have the doors painted your brand's color and you have them laid out and they're straight. They don't know the difference. Like the one of the risks I was concerned about is that customers would show up and be like, "Oh, this isn't what I expected. We want a self-storage unit with a roll-up door." That just hasn't been our experience. Like the customer doesn't care. If you answer the phone, you have good Google reviews, it's secure, well lit, and clean. They're just looking for somewhere dry to place their stuff. And we're not talking like high end furniture or wine storage. That's a different product. But the standard user or use case for self storage is not that person anyways. They're just looking for somewhere to place their stuff. So our experience has been that we get no pushback from the customers at all.
On the note of consumer preferences, are customers willing to pay the same price per square foot, generally speaking, for a portable as they would, a drive up built self
Yeah.
storage? Yeah.
Absolutely. Yeah, we charge the same or higher than the local drive up competitors, even sometimes the climate control competitors, because the customer is just not educated on what the different types of self storage. Every self storage operator thinks that the customer knows as much as they do about self storage, and they just don't. They're just looking for somewhere to put their stuff.
No, I think that's a very true statement. A lot of the times, like the people that move into the facilities that I own, we're the first person they call. And if we do the job right, they're one to move in.
Absolutely. Yeah, picking
And
up the phone is half the battle. It's like if you can have solid SEO ranking so that you're at the top of the list and you pick up the phone, and you have a fairly smooth transition to them actually moving into the unit, then you're going to win 99% of those bids.
now we talk a lot. We're talking obviously about the portable space, but you're obviously a very savvy self-storage operator as well. And so selfishly, I want to ask you some questions about, how
Sure.
your operation is run. So one of the key questions I think is worth asking is, number one, how big are some of these facilities that you're operating, and then what does your staffing look like to manage them?
Yeah, so we're a very lean team. We got three of us, and I have nothing to do with the operations. I'm primarily just the sales. So I have one operations manager from the Philippines who we hired remotely through a hiring agency that I found on Twitter, and
Is that
he
Support
runs.
Shepherd or a different
No,
agency?
it's Elevate and Delegate. So
Okay.
Brian Selentrop, yeah, his company, and I couldn't recommend them more. And we also have an accountant in house who does all of our bookkeeping. She also does the shipping and logistics for the container sales. But we use Hire Lat, and she is from Buenos Aires, Argentina. So we're a really small team, super efficient. We use a lot of AI, we use a lot of Zapier, a lot of automations, and then as well as just the new tech, the facility management software stuff, everything's automated. So we're pretty lean, pretty efficient, and we don't have any local management. So we have boots on the ground staff. They come on the 1st and the 15th of every month for approximately 2 hours. They have an automated checklist that they get sent from my ops manager. They sweep out any units that need to be swept out. We utilize DaVinci locks. So every unit, we require every customer to use our locks. You're not allowed to put your own locks on the unit. And so when they move in, there's a QR code on the gate. So if they just show up, because we do have people who show up expecting that there'll be an officer or a manager there, there's a QR code on the gate. They can scan that, takes them to the booking page. Within 5 minutes, they've chosen their own gate code. They've been text messaged their unit number and the DaVinci lock code that's on the unit, and they move into their unit. That can be done through a phone call or through their desktop at home as well. So it's pretty streamlined. Everyone's paying with credit card. I mean, this is all standard stuff in the industry now, but everybody's paying with credit card. The day two of them being delinquent, they're locked out of the facility until they make that payment, and all that stuff's automated. So there's no touches required by my team.
Got you. And in terms of the software that you're using to manage your facilities, which software did you go with?
We're using StoreEdge. That's not a recommendation or endorsement. We're just using it. Switching facility management software is a huge headache. We just did a demo with Cubby, and I would highly recommend anyone who's not in the space and any customers who I'm helping set up facilities. We're pushing everyone towards Cubby, integrated with Spider door access keypads and software. We really like all that, how that integrates together. So
Awesome. No, that's terrific info. And I think that just to give you a little bit of background on the facilities that I run, not asking for like,
mhm.
any sort of consultation here. But no, the facilities that I run, I still have on-site managers for both facilities. They're
How
two
big are they?
40,000 square. What is it?
How big are they?
They're two 40,000 square foot facilities.
Okay.
And both of them have additional raw land that I would love to do something with that would generate more revenue. Obviously, I
Yeah.
don't have aspirations of really selling the land because I just don't need to.
Sure.
And so my whole thought process has been like, can I get away with operating these two facilities remote? I'm willing to take lower occupancy because really my biggest expense are my facility managers. And
Absolutely.
although they've been great, they've been great, but I don't know if it's totally necessary because we've done the transition where I bought these facilities and the first thing I did is like get them a way to pay for this stuff reoccurring with the credit card or debit card online
Absolutely. Yeah.
because when I took over both these facilities, over 70% of the purchases were people coming in and paying. And these are lower income areas in
Sure.
Ohio. They've actually gotten a little bit nicer. So it's actually it's much nicer than it was when I bought them. But all that to say, like, do you think I could get away with operating these two facilities like with just remote
I
management?
don't I don't see why you couldn't. With a facility that size, your boots on the ground is going to be there weekly instead of bi-monthly. But yeah, I don't see why you couldn't.
Okay.
To me, there's no reason you couldn't. I mean, I'm seeing facilities that are being built out now where they basically just have an iPad on the wall and it's like behind a sheet of glass, and there's just you know your remote manager you just press a button and they pop up and they can chat with you and help you lease out. There's no reason that you need someone on site Monday to Friday at these things.
Okay. Yeah. Yeah. And selfishly, like it was just so easy, and I'm still getting a great return on my investment for these
Sure.
properties. So it's like, am I like, oh, do I need to change it tomorrow? But like, I know I should, because
How far apart are they?
they are probably 25 miles apart. Not crazy. In Cincinnati, Ohio, that's like or from Middletown, Ohio to Dayton, Ohio, that's probably like a 25 minute drive. So it's not very far.
So maybe an easy transition is part-time at each, right? So you have someone available between the two. But I mean, I think the tech and the systems are there that this should be a fairly easy transition. More important, I think, would be having someone, if you were building a 40,000 square foot or a 60,000 square foot facility ground up, whether it's portables or buildings, is probably having someone there initially for that lease up, because there's a lot of move-ins happening at that point. But once you've stabilized, they're really, I'm sure, I don't know what your monthly net move-in move-out looks like, but it's not drastic for most facilities.
No, I mean, at our facilities, it's probably, max 5 in, 5 out. That'd be
Yeah,
on the high side. Usually it's like
yeah,
2 or
we're the
3 in
same.
either. Yeah.
Yeah, if we had net move-ins of +5, that would be a big month for us. Yeah, think about if you could redeploy the cost you're spending on staffing to marketing, right? You could probably increase your rates.
Yes, and that's honestly where my mind has gone too, because the trick to these properties when I bought them, and I think it's true for almost anyone in real estate, is like you're buying properties. I paid, like a 6 cap for these properties, but the
Hmm.
market rent was literally so far behind. It was like
Right.
30-40% below market. And so I didn't really end up paying a 6 cap on that property, right? I
Yeah.
think it's
Yeah,
how
the
most of these
in-place
deals
cap rate
go.
is almost irrelevant on most of the deals I'm looking at. My expense ratio is not going to be the same as theirs. Often mine's higher because they're a mom and pop doing it for essentially for free.
Yes.
And the existing tenants, they're going to get a rental raise month 2 and month 3 from me. So we'll do the odd numbers the second month and the even numbers the third month, and that's just risk. That's just hedging our bets a little bit. If you gave everyone a rent raise in the same month and you had mass move outs, then that would be a bad look. So
Yeah. No, that honestly makes a lot of sense. No, there's so much to dive into there as well, but I do want to keep the conversation moving forward. And I want to talk more about
sure.
what the economics of your business look like now, and then kind of take me through the process, specifically regarding the portables. And because you do manufacturing, I guess that's one of the questions I should probably ask. Are you these portables that you're making? Are they like custom size? Are they like, you can make a 5x10, or you can make a 10 by 10, or how does that work?
Yeah, so we we sell portables from three different sort of two manufacturers and one supplier. One comes from Europe, and it's called a flat pack, and so they're not actually hinged; they're actually six separate pieces: there's a floor, roof, and four corners. They can come in every size from 7x7 all the way up to 7x20. Primarily for self storage, what we're seeing and what makes the most sense is some form of a 7x20 or an 8x20, and we put multiple doors on it with the ability to partition it. And again, it just comes back to, like, my whole thesis on these things and storage is maximum flexibility. So by doing a full size container, it's the lowest cost per square foot, it's the cheapest to manufacture and to ship to the site. So you're and with self storage, everything comes down to a cost per square foot, because that's what you're renting the space for. So if you can lower your basis, then you're going to have a better margin once you're leased up. So we like 8x20s, and we'll put doors on both ends, the ability to partition into two 8x10s, or we can have it manufactured with doors along the long wall, and we can do two doors on the long wall, or we can do four doors on the long wall, which would give you four 5x8s. And so usually when we're ordering, it'll be a mix of four doors on the long wall and then units with doors on either end. And those partitions take about 10 minutes to put in and out. You can train any boots on the ground staff to do it. And so when we built our first facility, we partitioned half the units or half the containers. So we had a mix of 8x10s and a mix of 8x20s. And every month on the 15th, we would just review what the demand was for. And if there was one unit mix size that was fully leased up, then we just go remove partitions and create more of those units and fill them off of our wait list. It was fantastic. It gives you so much flexibility.
So For people who, are looking at self-storage and maybe they don't own any yet, I want to really hit on how important that is, Josh, because my most expensive price per square foot is actually my largest sized unit because there's an undersupply of that unit
Interesting.
size, which is roughly like a
Yep.
10 by 20. So
Yep.
when you say that, I can have the flexibility of a 5 by 8, or, I can work it to like whatever you just discussed, there was like 8 by 10 or 8 by 20.
Yep. Yep.
And I can partition as the demand fills up for either one of those sides. That is such a huge advantage that, assuming that the consumer preferences here, which I'm sure probably match what you're seeing up in Canada,
Yep.
that's a huge advantage because there's a lot of vacancy that happens solely because you have the wrong product, and the
Yep.
ability to be able to change the product type as the demand in the market changes, or you just get a better understanding of what is actually available online. I do a ton of secret shopping to try and figure out what units I need to be basically.
It's very hard.
Yeah.
It's
Yeah.
it's black magic, honestly. Like figuring out the unit mix that's in demand in a market is so hard unless you're already operating, answering the phone, listening to the customer's needs, and it could change in a 3 to 5 mile radius. So you could be doing market research in your trade area, and it could be inaccurate based on where your facility is located. And so again, like everything I'm doing here is just coming back to flexibility and optionality. I just want the flexibility to just be able to adjust things and move things based on market trends. And unit mix could change if there's a new facility built down the road. There's like this theory that when developers who aren't currently storage operators, when they're building out their pro formas, they want to do this bankers mix, and that's all 5 by 8s, right? They want their whole facility 5 by 8s because they're getting 30% more per square foot for those. So it looks really good for the banker when they're trying to get a loan to do the ground up development. They go build this thing and it doesn't lease up because no
Yeah.
one wants a 5 by 8 in that market, right? Maybe they're more rural and there's
Yeah.
no demand. It should have been 10% of the facility at most. It was 5 by 8s and they did 30%. So now you got all this space. So with our units, you could actually design them so it has doors on both ends and 4 doors on the long wall of every unit. It's going to cost you a little bit more, but every single container could be converted from an 8 by 20 to an 8 by 10 to 4 5 by 8s. So like very, very low risk as far as figuring out what the perfect unit mix in that market is.
Yeah. And I'm thinking about for myself, just like what a great opportunity is. Like I have, a couple acres of additional land that are non-revenue generating. And it's like,
Yeah.
if I just added some of these units to my facility, that for the unit size that I am pretty sure that the clients are looking for, because they're asking me for it, they're not finding it in the area.
Yeah.
Just a very, very low risk opportunity. And so what does the structure look like when someone says, "Hey, yes, I do want to move forward, and I have this space available, and I want to like someone in my situation, I have additional space in my
Sure.
facility." How do you go about working with the client to figure out, okay, here's how much storage we think you should be adding to this facility. Here's what's going to cost you. Here's what the structure looks like.
Yeah, I'll give you sort of a big picture of what our sales process looks like from start to finish. So most of our leads are coming organically from LinkedIn or Twitter, just from stuff that I'm posting. We're not really paying to market this service at all right now. They'll send me a quick DM or message or email. They'll book an appointment with me and we'll sit down. We'll have a discovery call. During that discovery call, I'm just asking them lots of questions. I want to learn about like, why are you growing your facility? How did you get into self-storage? What does your market look like? And just gathering as much information about sort of what their goals are and what their facility looks like right now. And sometimes it's just raw land. They have no experience. And then we'll pull it up on Google Earth and we'll screen share it and we'll look at the site. We'll measure it out. And I can pretty quickly determine roughly how many square feet of net rentable space they can fit in there using our portables. And it's almost always 40%. So we'll look at that. And then essentially I can give them a quick perform. We'll go on Sparefoot. We'll look at what the local market looks like. It's like, and if they're operating already, they know what they're going to get. So we can do some quick math over that call. And then it's $100 commitment from them. And our team does aerial site layout. So we do a full site layout. We phone all your competitors. We do some local market research. We determine to the best of our ability what unit mixes would be in demand or are in most demand. And often if it's an existing operator, they can be helpful with that too. So you get a site layout, you get a pro forma based on that unit mix, and then you get a quote based on custom containers for your site. So the door locations, the number of doors, the number of partitions, the product. So we have 3 different products that we can offer, and based on the market and sort of their budget, we can offer 3 different products. And then we send them that package. I set up a meeting, we go over it. And if they're interested and they have approval by right to add portables or to expand, then they can put in a deposit that day and the manufacturing starts the following day. Takes about, depending where you are, if you're on the East Coast or the West Coast and which factory we order it from, takes about 60 to 90 days for the product to arrive. You hire a local team to assemble it, and you've just expanded or built a facility.
I love it.
Yeah, it's pretty smooth.
Yeah, one of the things, I mean, one of the biggest values there is obviously the secret shopping, essentially, that you guys do
Yeah,
on behalf of the client. It really goes a long way, and that's where I spend a lot of my time, is figuring out where supply and demand is and what rates are at, and where I can
for sure.
charge, because that ultimately derives, like, the demand for my facility from a pricing standpoint, and then at the same time making sure I have the right unit mix.
Yeah. Yeah, and we're getting very good at the layouts as well, so we can often maximize like odd shaped sites, and we're working with some iOS operators, which is industrial outdoor storage or truck parking, to add some containers on their sites because sometimes they're not a perfect rectangle that fits trucks. Trucks have a very specific turning radius and space they need to back in, and there's like funny little corners or sections that they can't utilize for anything else. So we're looking to add self storage at those sites as well. So there's lots of options.
Yeah, I think you really hit the nail on the head there too, where just the use case is so broad. There's so many people that would benefit from being able to offer this service in addition to just
For
their
sure.
day-to-day operation, not just self-storage. In
Yeah.
terms of cost, what is it? Obviously I have a pretty good idea of what ground up looks like here, because I've spent a lot of
Yeah.
time looking what it would be like for me to develop the other half of these facilities that I have. But what does cost generally look like? And is it a lease, or is it a true purchase, or is it a mix? Tell me about that.
So a straight cash purchase, the ballpark number I'm giving everybody is about $30 a square foot landed and assembled. There's some variability depending on where you are because there's inland freight from the coast where it gets shipped to your facility. Also, what your branding looks like if you want them painted. Like we can reduce those costs, but generally it's not over about $30 a square foot landed and assembled, ready to rent.
Yeah, that's awesome. I mean, if you just do the math right there in terms of what your ROI is on a monthly basis, right? I mean, I might rent, what would that be? Like a 5 by 10 for $50,
Yeah,
so 50 square feet, and your cost to get, the 150 square feet there, right? Is that 450 essentially?
yeah,
I mean,
yeah.
that's an insane return.
It's really good, and what we're seeing is generally like less than on a straight cash purchase in a decent market that's like $1.10 a square foot. We're seeing usually about like a 30-month payback after your expense ratio. So they pay for themselves pretty quickly, and these things last 20, 25 years. So you get a pretty good lifespan out of it as far as its cash flowing. As far as financing goes, one of the interesting things about these, and the other reason I really like them, particularly in the US, is they're not real property, they're equipment.
Yes.
Why that's interesting is through Section 179, you can depreciate them 100% in the first year. So if you have a taxable gain somewhere else in your business or personally, you can reduce that using Section 179, and you can still finance the containers. So you could finance them 100% and still depreciate them 100% in year one, which is pretty awesome. So there's some really creative stuff you can do with the structure and the taxes with these.
Yeah, that adds a whole other layer of benefit to this. And someone like myself, where no matter how much real estate I own, I always feel like I'm ending up with paying more in taxes than I actually want to.
Yeah. Yeah.
I'm sure a lot of people feel that way. I'm always happy to pay my fair share in case the IRS
Sure.
is watching me. But I always say I want to pay my fair share and nothing more.
That's it. That's it. I'm with you.
Yeah. But no, I was going to bring that point up. It's actually on my list here of things to talk about. Such a huge advantage in the fact that you guys will finance it, even and I guess, who is financing it? Is it you at Storage HQ? Is it more so the manufacturer financing this? What does that look like?
Neither actually. So there is equipment leasing companies that will finance it for you through most credit unions, or there's specific companies that do it. Equipment leasing is like really standard across a bunch of industries. The restaurant industries, construction equipment, most industries, large capital expenses, they're going to lease them because it's more tax efficient. And so every leasing company I've ever spoken with, and we have a huge list of partners that will work with our operators, are happy to equipment lease these things. The downside of equipment lease is you're amortizing the cost generally over 5 years. So it can be it can hurt your cash flow a little bit during that time because you're amortizing both the interest and the principal over that period. The benefit is on your balance sheet, it shows up as a monthly expense, just as an equipment rental. So you're paying principal and interest every month, but it's 100% deductible as an equipment rental. And then at the end of that equipment loan, you can just buy them for $1.
Got you. Yeah, no, that's spectacular.
And
I
it
think
doesn't
just
affect your ability to borrow. So it doesn't show up. There's no personal guarantee. It doesn't show up on your credit anywhere. I have close to $500,000 worth of equipment leases for containers, and it doesn't show up anywhere. It doesn't affect my ability to borrow personally or corporately.
got you. Yeah, I'm down on my sheet right now because I'm just thinking about it. It's like, all right, no more than $30 per square foot, and I got a 5 by 10. Again, that's $1,500. I think I said like 450 way earlier, but $1,500, and I might rent that unit out for $50 a month. It's like, oh my
Right.
gosh, man, that's just
Yeah.
those returns are absolutely insane. Do you see from your business and in terms of how it's growing? You said you've really just been focusing on marketing it through Twitter. I mean, how has demand for your type of business been? Have you seen it grow pretty significantly as people are looking for more cost-effective ways of doing things, or
Yeah,
what's
I
the take there?
have. I think there's a huge untapped market, and there is a couple other vendors who are doing it really well. And I've bought product from them. What I don't like about them is that they're not operators. They don't own storage facilities. You're not getting sort of that same personalized touch of like, this is what's actually in demand in your market. Here's a layout that's worked well for us. They're happy to just cram your facility full of containers, whether you need that size or not. And so I think that's where we can differentiate ourselves a little bit. You never go to a bald guy for a bald barber, right? So when somebody gets on a discovery call with me, I've talked a lot of people out of buying portables and building facilities because I'm like, listen, your rates are 60 cents a foot in your market and you have REITs. Like, I would not build this here. You have this vacant land. Yes, you can do it by right. You can build it. I will sell you the containers if you want, but I really don't think that that's the best fit for this market. There's probably a higher and better use for this land.
Got you.
And I've had that conversation more than I would have liked, but I'm not in the business of selling someone portables just for the sake of selling them portables. We really want to see our customers be successful. And that's through introductions to marketing companies, website building companies, facility management like Cubby. We give recommendations for cameras that we're testing. We're testing out some solar lights. We have a spreadsheet of costs to develop these sites in all the different markets. And so we're really trying to develop like a tip to tail service where if someone doesn't have experience in storage, we can help, we can provide the product and hold their hand through the whole thing right up to lease up.
In terms of how you want to flesh out your operation, are you looking to scale it in terms of, I mean, I'm assuming you're offering this service in addition to Canada. Are you also offering the service in the United States as well?
Yeah, I think there's a bigger market for it in the U.S., but we can sell these containers anywhere globally. So we're actually working with someone in Thailand right now who's looking to build the first self storage facility in Phuket, and so that's a pretty exciting project for us. And we may even joint venture on it. We're working on a few joint ventures where essentially you put up the land and have it site ready, and we'll provide the containers and operate the thing. So yeah, we're doing some exciting stuff outside of Canada and North America.
That's terrific, and I love to hear it. It,
Yeah,
it
it's
gives me
cool.
a little bit of a taste of how you foresee like your business growing, because you provide so much value as an operator. As this is like an additional. It's a huge advantage just to be able to offer. Hey, I can basically get this facility set up and have a ROI on it. Very quickly, because even taking into consideration the fact that you're used to operating teams remotely. I mean, you can supplement that and put that in any market, and it should lend itself well because you can really do it anywhere the way you have it set up right now.
Absolutely. Yeah, my goal, like originally pre-COVID, my goal was to syndicate, buy small mom and pop storage facilities, wrap them in tech, increase rates, and refi out, give my investors their money back. Now, everyone's doing that strategy. The mom and pops have caught on, and we didn't end up syndicating. So everything we're doing is bootstrapped, and we're essentially selling containers as a way to create profit within our business and then redeploying that into real estate and then operating it in-house. And so that's kind of why we're selling these portables. Originally, we became a vendor for all these portable companies just to lower our basis so that we could build our own facilities cheaper. But I saw that there was demand for a company to sell them who could help with more than just selling someone a metal box. And so we're hoping to provide value and service to our customers, and in return, it's going to allow us to grow our real estate portfolio, which my goal is hundreds of acres of industrial and commercial real estate that has cash flowing portables on top of it. And if there's a higher and better use, we can convert it to that or sell the real estate to somebody else and get rid of the containers. And so just a really low risk way to cash flow a whole bunch of industrial land.
Brilliant perspective, and I mean, you're one of the few people I know that is talking about this, and that's why I've really enjoyed watching your journey, because I do look at you as a thought leader in terms of how you have been able to maintain that flexibility, and you recognize that the use case of real estate changes. I think that is always the biggest risk, right? Is like when you're doing ground up, and you can get feasibility studies, and that does certainly provide some level of assurance, but
Absolutely.
you don't always know what it's going to be when the grand opening takes place, and I think at this point, for a lot of people starting up and who want to get in self-storage, the barrier to entry has gotten so high from a capital perspective, and operationally it's gotten more competitive to the point where you have to try to lower the risk in one of the facets, and reducing how capital intensive it is just seems like the obvious choice at this point.
For sure. And further to that, like one of the programs we're rolling out is an in-house leasing program where we pair a high net worth individual or an investor who needs the depreciation from the containers and an operator who needs the containers to expand or build a development. We partner them together and we work as the intermediary in the middle. And so we basically developed the program that I want for my facility. So I'm like, okay, well, I know that it's going to take me 2 years to lease up. Paying this equipment rental during that period, or this equipment lease, is pretty cash intensive. Like it chews up a lot of capital, just the carrying costs of paying for the land, whether it's a mortgage or a ground lease, and then the containers. So is there a way that I could basically get these things interest only? I think that it works out to about $70 a month per container is the rental fee for 5 years. The investor buys it, leases it to Storage HQ. We sublet it to a qualified operator who we're either going to help or who has experience in self-storage. They rent it for $70 a month. At the end of 5 years, they get an option to buy it at a reduced rate. The investor gets about a 10% return on their capital and 100% depreciation year one. So it's a really great program for all three parties. I get to sell more containers. I get a small spread between the two on the rental, and everybody wins. It's a very low risk way for that operator to expand a facility or to grow their operations.
Love it. That's again, just another very, I don't know how many people are actually talking about these programs. Would this be kind of the first of its kind to your knowledge?
There's other industries that are doing it similar, but nobody in self-storage.
Got you.
And to me, like it's funny when you talk to equipment leasing companies, they're like, oh, well, it's a new business. There's some risk. I'm like, yeah, but you fund like landscaping companies who are buying new equipment, or excavation companies. Those things go belly up all the time. I'm like, there's not a lot of examples of self-storage facilities going belly up unless they were built where they shouldn't have been built. And we've seen examples of that. But if I'm helping that person, and even if we're responsible for third-party management, I don't want to see that thing go belly up. So we're doing a pretty healthy feasibility study on it to make sure it's going to do well. And so I feel confident being the intermediary and connecting those two parties because we're so involved with the whole process.
Makes perfect sense. One more quick question, and then I think we'll wrap things up here. But
sure,
in terms of like where you want to see your business, 5-10 years from now, does it look like it's you continued, or is it more so trying to scale up and have a bunch of these facilities nationally, or bolstering the container side? Like, what's your primary focus right now?
Yeah, I think that me and my team just sat down, we built a big funnel, and top of that funnel is like marketing and content, and then it's container sales, and then it's real estate acquisitions. And so we do a lot of creative stuff with the acquisitions. So we're doing master leases with options. We're vendor takebacks. We're doing some exchanges. We're trying to get really, really creative with the real estate piece as well, so that we can continue to do all this self-funded. But I'd like to see our sales team grow, be selling like 1,000 containers a year and building 4 or 5 of these ground up facilities every year, and then operating them in house and holding everything long term, with an occasional joint venture partner, right? It's a really strategic joint venture, but no outside capital. I'll be bootstrapped.
Terrific. And I love it. I agree heavily with that as well. Josh, thank you so much
for
coming on the show. Yeah. Go ahead.
At some point, I'll be putting off some cash, and I'm going to need to learn more about hard money lending, which is why I'm listening to your guys' podcast. So
yeah, no, that's down the road for sure. But I'm more than happy to share everything I know as I'm learning it. I'm stumbling across new lessons every single year that I'm in this business, and I'm sure it's the same for everyone. But it's a good business.
Absolutely.
Always happy to swap notes. Pun intended. But Josh, thank you so much for being so generous with your time, almost up to an hour here. I took a ton away from this episode as a self-storage operator myself, and I can only imagine what people are going to be taking away as well. I think portables are just going to be a huge untapped opportunity for people that, have additional, space to expand their facilities. But again, just can't thank you enough for being on the show. And for everyone who's looking for your contact information, if you want to go ahead and take an opportunity to share where you want to direct the listeners to go, that'd be great. And then I'll also add whatever information that is to the show notes so they can access that there as well.
Yeah, Grant, thanks for the opportunity and great interview. I mean, really seamless. You're doing a really great job here, and hopefully it was informative for everybody. And if they want to get a hold of me, josh@storagehq.ca, because I'm Canadian, or at HQ Storage on Twitter. And you can find me, Josh Montgomery, on LinkedIn. But happy to answer questions, chat with anybody. I do, 8 to 10 discovery calls a week, and I'm always happy to connect with other operators and just learn from people too. It's been the biggest benefit of this business is just I get to chat to a lot of different people in the industry, and I learned a ton.
Awesome. Well, again, thank you, Josh, for being on the show. Thank you for everyone for listening to the Capitalized podcast. If you would like to access information to the show notes, we'll go ahead and leave a link in the description here to this video, wherever you're watching, whether it's Twitter, YouTube, what have you. Yeah, thank you.
Thanks, Grant.